Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So today the market opened and the question was, were we going to get over Dow 13,000? Were we going to clear 1370 on the S&P? And it's funny, I went on CNBC today. I sent them all my notes, and I've been talking about the different time frames that we trade. Some momentum traders that are a bit more short-term, some more macro traders, as well as the active investors and the long-term investors. So I put out, different expectations or what I think could happen within the next, short term, as well as, 2015. And one of the pieces I put in there was that I do think that we could hit S&P 1700 by 2015, and it amazes me how many bears there are out there, because I got emails, that's irresponsible, get out your pom-poms, you're just another talking head. I was like, are you guys kidding me? So if you guys could think to yourself right now, we're at 1375. In 3 years from now, or if someone said you had to make a bet, close your eyes and come back, where would we be? 300 handles lower or 300 handles higher? To me, I think it's higher, based on the technology, based on where we're coming out of this recession, based on housing getting better, based on just being a realist with an optimistic approach. We've been in a 14-year range, and I do think we have a better chance to breaking above it than going to the downside and joining the Rubini camp, thinking that the world's going to fall apart. If the world falls apart, I'll change the complexion and you guys will hear about it. But again, it's all based on your time frame. You all know that we're momentum traders here. We like to follow short-term trends, and recently we've had that accelerated uptrend. And I've been talking about the 10-day moving average. This is what I've been following, and I've been trying to stay long multiple positions with some hedges and trying to stay with it. So if you want my rationale on why, what I went over today, let's do that real quickly. Here's the accelerated uptrend. This is what most people on our site look at. This is the 10-day moving average that we discussed. Touched it right here. Didn't touch it again until we briefly went below it for maybe 2 days and then popped back above it. And that was after this small outside day. Then we kept going, touched it again, bounced off it, and then yesterday, on that big down open, touched it and bounced off it. So as far as the short-term accelerated trend, there's been no reason to switch gears, get net short, and obviously you could take off some risk along the way, but no reason to be fighting this. If we were to get a close below the 10-day moving average, here's the 20-day, and then obviously the longer-term trend doesn't even come into play. So here is your short-term trend if you're a momentum trader. If you go to the weekly chart, this is what I talked about also. I talked about this 1370. This was the high, right, of last year. So it is important to take it out, because you could potentially have a double top, and it still might happen where we push through, we'll see what happens, and then we come back, and there's no reason why, if that's the case, we could test this 1324 and then continue, because obviously you could see here, this trend line still, is still way in line and way intact. So either way, we shall see what happens here. But overall, now you go to just see the monthly chart. Long term, okay, here is where we're at. If you want to see trends on a macro basis, if you look here, you will see that, okay, here is your low. This is that outside day that we talked about. Remember that? Here's a high, here's a higher low. Here's your higher high. Here's another higher low. So what are we doing? We're trending, right? Trending since that low back in what was it, March of 2009. So what this also does is, if we take this out, we just made a higher high, which continues this uptrend. So I think that's pretty important. If you look here, okay, on a more macro basis also, this is what controlled the market recently. This is your double top. This was your 1570. Here's your double top before the major decline. This is when I started going actually on CNBC, when I pointed out the head and shoulders pattern before this huge decline. But anyway, here is your double top. So I do think we get above this and clear this, or we could just keep following this trend. There's really not that much in the way here. You have short-term levels along the way. If you want to put this up here, for my blind eyes, we get above 1370. There's definitely a chance that here's 1404 easily in the sights for this year, and there's no reason why 1440. So that's why I came up with 1410 to 1440 in December. I looked at points of reference, and I just didn't come out of them out of my my tuchus. Anyway, here's what I'm trying to get, what the market's trying to get above. Here's your accelerated trend. Obviously, we could still pull in and be fine. I think the bulls are definitely a little spoiled, but if everyone keeps waiting to get in for the perfect entry, you're not going to get anywhere. So with that said, getting back to momentum trading, which is what we do, there hasn't been as much as we would have liked. In January, it was plentiful. You could have bought, held, added, moved, grooved, you had a lot of success. Lately, the past 2-3 weeks, it's been a bit more methodical. You've had to buy the dip, maybe add a little bit, but if you add when it's breaking out, it's been a little tough. So it hasn't been as easy, so I understand the frustration. I'm not having as good a month in February, and I've been trying to be long as I did in January, but I'm still at the highs of my year, and I'm making progress, and that's what you can only do. You're not always going to have a blistering time, but if you're fighting this thing and losing money, you better look at yourself in the mirror. So as far as some trades, we talked about CF yesterday. It tried to break above this high and came in a little bit. That's why I say it's a little bit discouraging when you can't close on the highs here. We like when stocks close on the highs. It's okay. Sperling on a great call on that. Mosaic also, trying to come back up. POT, I don't know what that did today. Came up a little bit out of this flag pattern. It's a little things to do, nice and methodical. Some of you guys trading gold. Nice move. This is when it broke above this downtrend. I have not been that active this year in gold, unfortunately. Here, I just, besides some day trades, this was your nice move from your follow through. Descending channel, moved again, took a 3-day pause, closed strong. Looks like it can continue. The GDX, which we went over in the morning call also, nice strong day. I think Taylor and a few of the other people on my staff bought some. I did not, and I had a nice day. Now we'll see if this can get through this 58. This is saying that gold prices perhaps could continue, and this was the line I drew actually this morning. As far as some of the banks, you guys saw I started to put JP Morgan back on last Friday, and that just shows you how you could put 1 + 1 together and time it, where I put some on the dip on Friday. Mr. Buffett was doing his whole speech with Becky Quick, and he talked about buying JP Morgan as personal. Stock was still down 20 cents yesterday when he said that, before that wide range bar. So you had time to say, wow, banks are holding in well. One of the most famed, best investors out there is saying that he wants not only JP Morgan in his Berkshire Hathaway or whatever, he wants it in his PA. Maybe it gets some attention. And PS, JP Morgan has had a really nice move. Okay, this is, I think, the day that we bought it back. Here is your rest. Here, you could have accumulated again on yesterday's down move into the 20-day. Strong move, a little bit of follow through, and you're not going to get a blockbuster move into here. It's going to be pretty much slow and methodical. So if you're just in it, I would hold it. There's not that many big trades to get in these banks. Goldman Sachs was still frustrating today. It tried to go. Obviously, this big move didn't happen, which I was drawing, which hopefully at some point it works its way there. I was long yesterday. I did add a bit today above 117. It tried to get through this resistance, and they're still not letting it go yet. Really, the best trade in Goldman Sachs was earnings day still. Here was your clean trade through this little downtrend, and then it's been pretty choppy since then. That's why I don't think a lot of guys really are talking about it, but it's worth holding. You could hold it versus 113, and perhaps enough people are worn out that if it gets through today's high, if you look at Goldman Sachs, the high of today was 118.66, and if it gets above there, perhaps we see a move to 125. I'm going to try and stay there. Wells Fargo, same thing. Big wide range bar, took out a few of these days, closed pretty strong. Banks are holding up, decent rotation. So if the rotation continues, I was like, you know what? OAHs have taken 2 days off. Let me buy some of those back. I've been holding this since December, one of the longest holds I've had in a while, which shows you that you could actually, as a momentum trader, hold things if they're trending. So with the OAHs, just bought a little bit back. Nothing so severe, but here is your move out above this last trend line. This was your buy area number 1, buy area number 2. Here's where it cleared it. Now you had a retest, so it's worth trying. This is still in a nice uptrend, and until this changes, I'm gonna stay with it. And even if it breaks this, I might even stay with it even longer to this 42. But at this point, it's still holding well. Some of those stocks still look good. As far as Google, this is another example of knowing your time frame. I know that I'm a momentum, a momentum trader, and I don't typically hold through earnings. I came out with Google saying it was my stock of 2012. First, based on the pattern that I saw going into the end of the year, which actually triggered and made us a lot of money. If you guys remember, it was trading at that multi-month high, broke through, you could have made 35 bucks before it pulled back in. And then on earnings, I don't think any momentum traders took it into earnings. If you're a macro investor, you took it, but then you also had to know that if it didn't come out well, that you would have had to been in the penalty box and worked your position. So if you look here at Google, as far as time frames, this is when technically it looked great, and this is why I listed it in the beginning of the year. And it wound up being a really nice trade, and we sold it into the strength. And sometimes you sell into strength and you get upset because it continues. This time kind of got lucky it didn't. And then once it came back into this base, it took some momentum out of the trade. So it showed me that it wasn't ready yet. And then this was the day it closed on earnings. I took options, so I knew my risk was premium paid, and I lost it all. On this down open, boom. Okay, but if you recall, for days I was saying, be careful, let's wait for the 200-day moving average that moved up. Let's see if it could hold support, and you buy some more. If you took it into earnings and you're trying to develop a macro position, you should never have more than a tier 1 anyway. You're getting a little bit more, so now you have a nice average cost. This was your cash flow trade when it went into the gap. We talked 591 many times, gave you a nice 2-day move, and now it's consolidating. So if you did buy it around here, okay, and you cost average into a little bit more, you probably have more shares, a better average cost, and there's still a lot of year left. I still think that Google will make new highs on this year. But that's my option, my offensive coordinator hat talking, not my trader hat. Today is a trade. I did get back long. It's trying to clear this area, and I'm going to stay with it. And I think it could continue. If it opens down, maybe we buy through today's high, and then we see it go. But today, I'm back long Google. I did a trade within here, and now I think I'm going to try and stay with it. Maybe I'll put a stop in, at 615, and then see how that goes. Or what's the low here today? Let's see. The low on today is 608. So really, it should not. If it's any good and it wants to keep momentum, and you're a momentum trader, this should be your stop. And let's see. Hopefully, it continues. As far as what else? What were we talking about today? I think we talked a little triple M. That stopped me out just because sometimes I trade poorly, and I guess I didn't give myself enough room here. If you want to take a look, really nothing happened that was so wrong, except for that this is a choppy, sloppy, crappy mess. Did I say sloppy, crappy, choppy mess? Yes. Anyway, but it's still in this range, and I guess if it finally breaks above with huge volume, I'll do it for a day trade, but I think I had a little bit too much overnight. I thought that on this move it would continue, and it didn't, so I'll revisit it another time. Boeing also stopped me out at 2. This is just a slop, crap mess, and I'm sorry for using bad words if you consider those bad words, but that's why I really don't trade these type of stocks. I like tech stocks, and I feel like I got away from them a little bit. But anyway, this Boeing, if you look at it on a more macro stance, it's still fine, but so hard here. This is just messy. I'm not used to that messy. As far as Amazon, today you had your first wide range bar off of support. So I had the March options that expire in 3 weeks. So after we held that support there, 175, and I soared up $4 or $5. I said, you know what? If it continues and goes to the upper end of that range around 190, I'm going to go worthless. So I said I'm going to step off this small little landmine. The trade didn't trigger, and I lost half my premium. So you saw that leave my virtual floor. I'm no longer long Amazon puts. The reason why I bought puts is because I knew a day like today could happen if it doesn't trigger and hold below. So at least I know that my risk was premium paid, and that's how I like to do Amazon. As far as trading an intraday, sometimes if it has a perfect setup, it could happen. But at this point, to me, I get chopped up in it. So that's why I'm like, you know what? It looks on a macro level weaker, which it still is. But I don't know if 2 or 3 weeks is going to be enough after looking at today's bar. If we were to engulf it in the next few days, I'll revisit again. But for now, I said I'm going to salvage a trade because all of a sudden 2 or 3 weeks comes up on me quick, and I had 175, 170s. I didn't want to lose it all, so I lost half. Big deal. That's why you hold multiple positions, because you're not sure which one's actually going to ignite. So if you look here at the chart of Amazon, this was that move that a lot of guys actually saw the relative strength today. And if you were short and you knew that it wasn't breaking this level and it started to go, you had to cover. So I figured if I was short, I would probably cover. So why not sell my options? And then this wound up being a clean day trade. So it's still in this lower wedge type formation, but until it reaches its downtrend again, it could take some time. So that's why I got rid of my puts for now. As far as IBM, I know I was a little disappointed, but if you take a step back and put it in the scheme of things, it had a breakout. It's now consolidating above the breakout. Yes, it wasn't an Apple like Apple going nuts. It's still IBM. It's still conservative. It's still a slow mover. So you have to expect less. So today, I was like, oh, I wish IBM would have went today, but it didn't. Maybe it goes tomorrow, and maybe it becomes a better trade with a little bit more of a platform because it consolidated. If you look here at IBM, it still looks really good. Okay, take out this little area so you can see it a little closer. It's still above, okay, this last breakout. Let me get you a little closer look here, which was right here. If you remember, we were in tier 1 in this area. This was your clean momentum move. And yesterday I retested a little bit today. Today was just frustrating really if you bought more. I know I bought a little bit more when I thought it would be able to get above this 199 area, and it just wasn't ready yet. But if you look at it now, and with the market up what it was, no big deal at all. It could go sideways even more. Look how long it took to break through this. So with this type of stock and the way it's controlled, maybe it needs a few more days. So stay in tier 1. At some point, if the market still hangs in there, we'll get that new trade to break above 200. Maybe tomorrow, we shall see, but it's still fine. Intel, I bought it back right on this day actually. Versus support, I thought it was a decent risk reward, and you know what? It just engulfed this little 2-day move. Remember, we traded it for this 2-day. It wasn't ready, and now it looks okay again. So that looks like it can continue. New one I bought yesterday. I guess nice little buy there, right? This was on earnings. Sales traders are telling me that some of their contracts were pushed out. That's why they missed. It's been slowly coming lower. Here's your little outside day. I bought some here, some nice follow through. It can get up to this area before you have to worry about it. But what I'm being told actually with this one is, let me get this out of the way. You could keep it, hold it if that's what you could do. There are big things out there for this stock. You're buying the dip. Technically it doesn't look great, but they're saying that the next few quarters is going to be where it's at, and that Apple is actually committed to using them with all their OS systems. So that can mean big earnings, and it's not just Apple, it's some other companies as well. I don't think it's a buyout like everyone hopes to get immediate gratification. Tomorrow, it might be in the future. So if you long it, just make sure you don't have too much and don't expect too much. But as of now, it looks like it still has some more, has some more room. As far as like a win, still not ready yet. Nothing really worth talking about except for it's still, in this downtrend. It's still being controlled. You would have thought that it would have acted better to almost fill this gap. So to me, it's an avoid until it gets over this downtrend. So at this particular point, it's just an avoid. LVS acted much better today, closing the highs, nice bull flag, looking strong. Good book says take that long. As far as X, not really doing much. It's pretty disappointing. I actually would assume you haven't heard me talk about it in a while. I was really trading it right around here, and it was a bit of a sloppy mess. And once it broke back below, I haven't even looked at it. So I guess you could look at it again. But to me, this is really just noisy money, not worth looking at. Let's see what FCX is doing. Nothing great either. I think the last time I traded it, which shows you how you could be a trader and leave, was right here on this last bull flag, and then it had a move, and then this choppy mess wasn't for me. So as a trader, you could almost love them and leave them at times. So that's the beauty of our business, is if you're in front of your computer, you could stick and move, and you could trade things that have a nice 2-day setup and leave them. But then you could also sit in some things that are trending nicely that the market can make you some money with. So all in all, we did clear those hurdles. You're going to see the newspapers. Long term, it's probably good to get some attention on the market because people think they're missing something. For us, technically, we know we're smarter than that. It's really the 10-day moving average that's been important. It's really been the rotation and the methodical breakouts. It's been using a tier system and staying educated. So all in all, nice day. Tomorrow, Stephanie Lynn comes on for the morning call, and you know how she always adds a lot of color. Chow was great Monday, Brittany Tuesday. We're giving you different looks every day with different styles, and I just hope you're enjoying it, and we're adding as much value as possible because you need to keep moving forward and staying with this market, either long, short, whatever you're looking to do. There's a lot of strategies working. Have a great night.